Welcome to TradeTheNBA.com. This is John. This report is for the 22nd of April. Well, the bull move continued. We see a declining 50%, which means 100% dropping. Usually pulls price towards that 100%. So the question becomes, does the 100% drop fast enough to get closer to price to reach it? We're looking at the NBI readings here, and the magenta has still been clearly above and yellow. We saw the white moving ahead. We thought that might give it a little bit of pause, but while it did retrace a bit, it caught a little bit later on in the day, and that was enough to continue to drive it. Of course, now you see DOC with green over cyan, so all the bull elements maintain themselves, and until we get that return pivot, we're still in a long configuration, and short squeeze continues. So it's been a gradual build coming off here, but we've seen steady improvement from DOC red, which is what we look for continuation. But this all began really with the rising gold shakeout. That's usually enough to give it the strength to push forward as that starts to flatten out. Now that we're actually seeing blue rising too, so usually when those meet, that's usually the end of that run. So for now, and of course, like we pointed out before, the NASDAQ was leading this and it was much stronger than what the S&P was showing. And it's evident in all those readings. You got the midterm buyers, shorts completely vacant. In fact, in this particular case, lower than DOC red. So we all know that cyan under red is always buy. None of that's changed, and good build over the shakeout. So all of that's pretty consistent, so we're getting no deviation from that standpoint. There was huge excitement for the euro because obviously the EU raised 50 basis points, but of course today the Italian government failed as Draghi resigned, and the EU, or the ECB, the European Central Bank, decided to go ahead and say that they will spend whatever money it takes to buy Italian bonds, but the spreads are already out of control, and the only people that are buying these are going to be the ECB, who will then try and convince other banks in the area to take them and tell them that they'll give them full collateral value, when in fact everybody kind of knows that they don't have any value. So it's sort of an interesting one. How big will the ECB allow their balance sheet, which is already massive, to continue to grow? And that's what's literally led to this euro collapse. And the interesting thing is from a macro standpoint, you have to understand where the inflation is coming from. It's not coming from necessarily the loose money in this particular case in the EU. It's coming from energy prices, and raising interest rates really isn't going to help reduce energy prices to stem inflation. So in a way, it's counterproductive, because all it does is just continue to harm purchasing power of regular individuals and adds to their cost basis for homes and everything else that are on adjustability scales. So kind of just a misread. You have to understand where the inflation comes from, not just that inflation exists. And I think, again, classic policy error, thinking that just interest rates alone can make the driver. I guarantee you that a removal of Russian sanctions would cause inflation to plummet, at least the rate of increase, dramatically, as oil prices would tank from where they're at. And that alone would create more of a deflationary condition, causing everything to stabilize much faster. So bizarre. And a complete misread. And this is where, often you get these smartest guys in the room, and they're always telling you these things, but it's kind of a basic misunderstanding of what it is to actually be in business and actually have lived in the real world versus, just a pen and paper world. My opinion, but I think it's not too hard to draw those conclusions when you see the realities of how it exists. And obviously, we've been talking about this for so many years. Even back in 2012 and 2013, when everyone was saying that inflation would come, and it's like, well, yeah, but it's not going to happen until you have a constriction of supply issues in that, because during the time that everything was readily available, there was no reason for price to increase because there was abundance of everything. Once the COVID supply restrictions kicked in, that messed everything up, and that's literally what began the cycle and literally unraveled all of this quantitative easing. Oil still hovering around 95, so just again, that's the longer this takes place below the current peaks is just going to reduce the rate of price increases. Not that there won't continue to be price increases, just that the rate of change will be lowered. And from a gold standpoint, again, this is going to be recognition over time, not happening conclusively yet, but there isn't any question that gold is going to have to make a rise. And of course, as we've talked about, it's not hard to adjust that given that most of it's paper market trade and not the actual metal itself. From a treasury standpoint, again, interesting rates continue to decline as this expectation that the Fed is going to be stopping their action and flipping to quantitative easing from the tightening. I think, again, it's more likely that the Fed will remain misguided and continue to raise rather than the other way. It would be nice if they actually stopped, but it seems unlikely. They were just way too late to the game. They have no control over where inflation is going, and none of the policies that are being handed down from the top in Washington promote the cessation of inflation, and that's the real issue, because a lot of those things, again, could be stemmed. If there was plenty of oil flow coming out of the U.S., prices would drop dramatically on a lot of areas, which would ease all of that throughout the economy, and the raising of rates only makes the real estate situation more compounded. So you can see the pressure that's being applied with the excess that exists in there. It's creating some major disruptions that are probably going to start to play out towards the fall, is when we'll see them. Bitcoin still holding on to just above that 23% as it's starting to decline right now, but we've got white leading, so every pivot of magenta here now going back underneath the yellow NBI will lead to further weakness. We haven't seen much activity from shorts from a Bitcoin standpoint at this particular stage. There just haven't been enough buyers to push through the number of people that need to sell. ETH has seen some, again, beautiful moves, just very clean within the NBI readings and the paint bar there. From a 50K standpoint, you can see we started that push up and we're getting some little bit of softness, still a little early because we're still making higher histograms, higher highs, a little bit of gold lead, so there's the potential that that's going to continue. We had some softness earlier in the day that was reflected, but the turnaround became pretty apparent early on once magenta moved above the white NBI at that particular stage. Then you had green over cyan. That led to where we finished off with the peak move. So intraday, we started off with that pre-market that I had on the Skype chat, where we were just back and forth, and then we had the move to the highs, but clean sell signal. There's that DOC spread we talked about versus ones where the cyan is well below red, and you still get the breakdown of NBI. In this particular case, everything was leaning towards a significant decline, and that's exactly what happened. Once white started leading, zero was into play. I highlighted a couple of these situations here. This is one that's often complicated from a coloring of the paint bar setup, because when you have red leading, we understand that yes, there's going to be a rally because you're both magenta is still above yellow in that, but it often tails off very quickly. And it's one of those where you just have to have that awareness where as soon as you do get the breakdown of the NBI, but in this particular case, the NBI, while moving lower, still stayed above yellow until we get to this brief point right there. But at that particular stage, we had rising DOC red P2, and so once the turnaround pop above came in, literally at the end of the secondary red bar, it was off to another run. And then we started getting back and forth, so we ended up with the first short signal there, popped back up. We thought it could have been in a little bit of trouble, particularly with green leading, but then it broke down a second time, allowing for actually better price improvement from a short standpoint, and then that led to a nice move lower. And here again is what I was talking about, where you get the turnaround and it's back and forth between red and magenta leading, and again, those usually end up having a short shelf life. In this particular case, the white shot above as that began its pivot, and sometimes you're not going to get as quick a turn to the short side on this. I've had to move them up when it's below 50%. It behaves slightly different than when above 50%. Usually the first pivot of magenta coming back lower. So obviously this is a little early from a standpoint of the magenta being back below 33 level in that. So if you notice that one, that's at least why I showed that exception, because these often peter out pretty darn quick and they lead back to turn down. Now for the long standpoint, that's what began the rally. And then we had a few successive, very soft shorts. Again, there's that cyan under red still during them. That's why it's not a lot, and you have to prepare for a turnaround within those situations. But here, different because you get the sell signal with cyan leading on DOC. So markedly different, and also histogram moving to the negative makes it clear that that's going to be a much longer short. And in fact, it went all the way to 50% before we had the turnaround. And then we did a little bit of back and forth from there. So it's always good to point out those little nuances and why in some of the programming you see some of those changes, just so that you're aware of the dynamic of what that red does leading, particularly when you're in the softer zone under 50% Fibonacci lines. As always though, trade well. We're going a little long, but I will certainly keep adding to that kind of detail so that you're clear as to why some of the colors do what they do. Trade well. We'll talk to you later.